Netflix announced their earnings today, and they really impressed Wall Street. They grew their revenue really well. They improved their profitability and increased their free cash flow. The trifecta. Good job, Netflix. As a result, the stock is up 15%. Now that I have new financial statements for the third quarter that just closed, I can update my analysis and determine what I think Netflix is worth. I'm a current stockholder at Netflix, and I'll make a decision whether I need to buy more shares, hold, or sell my shares in Netflix. I'll go over my process and then my analysis and then my decision whether I'm going to buy, hold, or sell on this video. Do me a favor and like the video and subscribe to my channel. And if you can comment, I'd really appreciate that. I create videos to put my analysis out there, and I get great feedback from other viewers. Feedback sometimes contradicts what I'm doing, and it's really interesting to see how other people evaluate companies and look at valuing companies. So I really appreciate the comments. Keep them coming. Now let's go over my process and Netflix. I have a process. It's simple and it's consistent. I look at 4 areas in a company and then make a decision to buy, hold, or sell. I first want to put myself in the role as a business owner. Do I want to be a part owner of Netflix, and do I want to be in the industry they operate in? Second, do I believe in their management team, and are they operating the business well? Is the balance sheet in very good health and worth investing in? And am I getting a discount? That way I could see my investment go up in value over time. And based on the answers to those questions, I buy, hold, or sell. Netflix is obviously one of the leading streaming companies. They and YouTube are the leaders in the space, and they are the leader in paid subscriptions for streaming. And they've done a great job in growing their business around the world. Netflix could be viewed around the world. It's just a great business that's turning into utility, meaning that everybody's going to have Netflix at some point. So great job to the management team for growing such an awesome company. It shouldn't be a big surprise that streaming continues to take market share away from broadcast TV as well as cable, and it continues to grow. The 2 big growers are Netflix and YouTube, and that's just going to continue now that we have a connected world where everybody has their phone connected to the internet or their PC and even their television. So Netflix really has a lot of fertile market share to take over. Looking at the financials for the quarter that just closed, which was Q3 for 2023, really good growth in revenue, year-over-year growth of 8%. Their operating income looked really good. Earnings per share looked excellent. So just a A+ earnings report for Q3. The paid subscribers up 10.8%. And free cash flow was up. And one note that I'll put in there, I read through their earnings release or their shareholder letter, and they stated that with the union strike for writers and actors, they couldn't film new movies for Netflix or new shows. And what that did is it halted production, which ended up giving Netflix a boost in free cash flow. I'm taking that into account, meaning that in 2024, they expect to get back to a more normal production schedule and will be spending cash. So I'm going to take that into account as I value the company. And one of the metrics that I use is free cash flow. Over time, Netflix has become more profitable. And one of the big reasons is that they were developing a lot of their own content in the years 2016, 2017, 2018, and 2019. And what that caused was just a big headwind on profitability and on cash. But now that they have a very substantial library of content, they can really capitalize on that content that they have, and the profitability phase of the company is really underway. So I expect more profitability and good cash flow going forward out of Netflix. The generation of additional cash flow showing up in the balance sheet. Their cash is much higher than it was at the end of 2022. And their debt is about the same as it was at the end of 2022. It looks like they're going to pay off some of that debt shortly. But if you add these 2 lines up of the debt in short term and the debt long term, it equals what they had previously just in long term. They are well below. Debt is less than 3 times EBITDA. I'll show the calculation later, but they're well below that. So their balance sheet's in really good health. I believe that Netflix currently is fairly priced, and I'm using the price that they're currently trading at after that 15% bump. And what I mean is that each share is really worth about $403, but you can buy shares today at $401, give or take. The stock is really moving. It might be up to $402, but it's a fairly priced stock with a very good company. And it reminds me of what Warren Buffett said, which is I'd rather pay a fair price for a great company. That's the case for Netflix. I'm a current stockholder. I'm glad I own the stock. I'm up on the stock, and I took a big gain earlier in the year. I'm glad I did so because I'm going to show some graphs later that kind of support my decision. I'm getting to this valuation by taking free cash flows, and I'm going to take what they guided, which was $6.5 billion. And I'm not going to grow it for the next 4 years, expecting that production is going to return. And it might even be lower than 6.5 billion, frankly. So I'm not going to grow cash flows in the first 4 years. But after that, I'm going to grow them at 5%. Terminal value being all cash flows after year 4 are going to amount to $227 billion. The present value using a weighted average cost of capital of 8% is $176 billion. I'll add the cash on the balance sheet and take away debt to get to the equity value of the company. And this number is not correct. It should be right in line with the equity value of 169 billion, showing that the stock price per share that I calculate using free cash flows is $390, not too far from where it's trading today, and only a 3% premium that you'd be paying based on free cash flows. Earnings per share looks great. They're just doing a great job being profitable. And based on a profit of earnings per share going forward 12 months that I estimate at $12.50, they have a high PE, well-deserved, growing company, firing on all 8 cylinders, a very high PE, but I think it's a good one. It's accurate, I should say. I estimate that they have about a 7% discount because each share based on earnings per share is worth $429, but they trade for $401. Combined, it's just a 1% discount on the shares. So the last time I evaluated Netflix was on July 19th of 2023. The stock was up almost 62% year to date at that time. And they were trading for $477. I decided to sell at that time, and I sold probably about 80% of my position. And I picked up a really nice gain for 2023. And it was proven, later that it was a good move because the stock has really come down from $477 down to $403, which is what it's trading at the moment I took this screenshot. So overall, I'm glad I sold shares earlier. The stock is really has gone up and down for 2023. You could see that it's gone up and down. And I think the current rally may last a little bit, but I think it's going to settle down around $400 a share. Year to date with Netflix, you're up 36% if you had bought at the very beginning of the year and held your shares. So year to date, still doing great, beating the S&P. It's just going forward, I think it's fairly priced. So I'm not expecting a ton of appreciation out of Netflix. So the scorecard on Netflix, it's a hold. And the reason for it is there's no discount on the stock. I think the company is great. I'm glad that I own some shares. I'm a customer. I think Netflix is here to stay. Very valuable company. The company management team's excellent. Debt is well under control. But without a discount, I'd rather buy into a company that's very discounted, and I expect the market to correct the price and give me a great gain. And I'm not seeing that in Netflix, so I'm just going to be holding my shares until things change. For all I know, the stock, like it's done before, the price starts going down and it achieves a price where I'm a buyer. Or if it goes up really high, I'm a seller because I'd rather sell. If anything, I'd rather sell early and bank my gain than stick around and see a really nice paper gain go away when the stock comes back down to its true value. So what do you think of Netflix? I'd love to hear in the comments what you think of Netflix, where you think the stock's going. and see your comments. I'd love to hear comments on what you think of my analysis, good or bad, and what you think of my video as well. Do me a favor and like the video and subscribe to my channel. I'd really appreciate that. Good luck investing in 2023.